Hello, on behalf of the Missouri State Alumni Association, welcome. My name is Greg Fansler. I serve as Executive Director of Engagement and Alumni Relations here at Missouri State. I'd like to welcome Tori Jacobson, who's the Financial Aid Coordinator, as well as Rob Moore, who's the Director of Financial Aid, with us this afternoon. As part of our Bear Talks program, Rob had reached out and was curious and wanted to share perhaps an opportunity for alumni to learn about the landscape of what's taking place as it relates to financial aid and certainly loan repayment. And bears out there, for those of you who still may have loans or may be curious about the landscape of what's happening at the federal government and to how we're servicing bears here. Felt like this was a germane topic, and we're very excited to have both Rob and Tori with us, who are going to share with us about 20 minutes about what is happening currently in the landscape of financial aid, and perhaps have a few questions that are generated afterwards, but thank you for tuning in to this program. You'll be with us for about 20 to 30 minutes, and I'll turn it over to Rob and Tori to take it away. So.
Great, thank you, Greg. As Greg mentioned, this is an opportunity for us to share some information with you all regarding developments with student loans, particularly those held by the Department of Education. There's been a lot of uncertainty regarding when loans will go back into repayment, what borrowers' obligations are. So hopefully we wanted to share some information as we have it today to better prepare our alumni who do have student loan obligations to go back into repayment when those recommence. So we do have a PowerPoint that will present this information through. It'll be available afterwards that you can go through for any contact information that's provided. And you'll also be welcome to contact our office if we can provide any resources to you. We're happy to do so. So to begin, what do loan repayments look like in a post-pandemic era? So as I mentioned, a lot of uncertainty has occurred recently, so hopefully we can help dispel some of that. Just to give you a little bit of background of how we got to where we are today. So the first federal loan repayment pause was signed into law March of 2020 in response to the coronavirus outbreak. It was part of the broader Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act. And it was actually originally designed to only pause loan repayments, interest accrual until September 30th, 2020. However, due to resurgences of the COVID-19 crisis and the impacts that it had on the economy, the loan freeze was extended around 6 times until its most current iteration, where the pause will end August 31st, 2022, and repayments will resume September 1st, 2022. So again, that is the timeliness of why we wanted to get this information in front of our alumni who do have student loan obligations. Now, regarding the current stakeholders who have been actors in this unfolding drama, of course, there's the executive branch, which is overseen by President Biden, and he directs the actions of the Department of Education as well as the Secretary of Education. The Department of Education is the entity in the federal government that's been tasked with setting the parameters for loan repayment resumptions, as well as other loan-related initiatives that we'll talk about briefly. Within Congress, there are a number of representatives who have been parts of conversations revolving around how the freeze should end, how repayments should resume, what sort of loan forgiveness could potentially take place, and then what various borrower protections need to be put in place to protect student loan borrowers as these repayments go back into effect. Other actors in this process are the servicers. Those are private companies that the department assigns loans to, and they handle the billing and other services on behalf of the Department of Education. So every student loan borrower actually has been assigned to a servicer who is their primary point of contact when engaging in repayment. And finally, borrowers. So that would be you, any individual with outstanding federal student loan obligations. So this is why it's important for you to be aware of what's transpiring, when you need to go back into repayment so that you don't miss any repayments that could negatively impact your credit or other financial considerations. So as I mentioned, in addition to the resumption of student loan repayments, another initiative that the Department of Education is looking into is what they're calling the Fresh Start Initiative. Essentially, we're waiting on more details from the department, but what we do know is that the Fresh Start Initiative is intended to transition borrowers smoothly back into repayment by allowing all borrowers with paused loans to receive a fresh start on repayment by eliminating the impacts of delinquency and default and allowing them to re-enter a repayment plan in good standing. So essentially what this means is that any students who were previously delinquent or in default on their student loans are now being brought back into a good standing status on those loans, and they're being provided the opportunity to resume repayment, which could have positive impacts on things like their credit, garnishment of wages, their ability to receive federal benefits. So it's an opportunity to kind of, as the name implies, give everyone a fresh start as far as their student loans are considered. Like I mentioned, there's not a lot of detail available about this initiative yet, but as more information is brought forward, there'll be that information will be provided through our resources such as social media and blog. So now I'm going to hand it over to Vicki Jacobson, who will discuss what loan borrowers can do to best prepare themselves for the resumption of repayment. So come September 1st, what borrowers need to do to make sure that they stay in good standing with the Department of Education. So Vicki, I'll hand it off to you now.
Okay, thanks so much, Rob. All right, let's look at a few options within the loan repayment system. One more. Okay, there we go. So the Department of Ed has some categories for your loans. They might fit into a forgiveness status, cancellation, or even discharge. If you're watching the news or have been paying attention, one of the popular ones is this public service loan forgiveness. This is for folks who are in a qualifying loan repayment plan, qualified employment, a lot of qualifiers here, but after 10 years of on-time full payment, the remaining balance is forgiven. That does require a separate application. There's also teacher loan forgiveness. Now there's a dollar amount cap on this. It's only up to $17,500, and that's for those that are teaching full time after 5 years of service. Again, there's an application for this. Few students have still a Perkins loan. This used to be a loan that was federal funded, offered for this through the school, and the student then repaid the school. Most of these loans have been sold back to the Department of Education. These loans may qualify for cancellation, so different category here. And then finally, total and permanent disability discharge. This category is listed as a total discharge of the remaining loan balance. Full application here. This may be for people that are disabled. I believe the federal servicer on this is Nelnet. Again, all of these are an option, but do require a separate application. Okay. So where to begin? Let's begin with our federal loan servicer. And as Rob mentioned, this is the company that is assigned by the Department of Ed to handle collection on the loan, collect and update your personal information. Don't confuse this with a collection agency. This is an assigned company that is there to help you, okay? They can help you in selecting a loan repayment option. They're the ones that will collect your monthly loan payment, or have been if you've continued in loan repayment. So it's very important to update your personal information with them. The information they have is from when you signed a master promissory note when you first took out a federal student loan. Well, people move a lot. So make sure that your federal servicer has the most current information so that they can reach out to you, your address, your phone, your email, okay? So where to get started? Specifically on studentaid.gov. If you don't remember your FSA ID, that's your username and password that you use to submit the annual FAFSA, you can log in here and reset your username and or password. If you don't think you've ever created an FSA ID, then you're not that old, you may have to create an account just to log in to studentaid.gov. So it's very important. Let's first establish your FSA ID so you have access to this website. Okay. Here is a current list of what we know as the federal loan servicers. Right up there at the top is Fed Loan Servicing, who will be transferring all of their borrowers at the end of this year to MOHELA and other servicers. They've opted not to renew their contract with the Department of Ed. Also, two companies that have exited the servicing side is Navient, who is now AidVantage. They have transferred their borrowers to AidVantage, and Granite State have transferred their borrowers to HESC, also known as Ed Financial. So again, visit studentaid.gov and you can identify your federal loan servicer if you're not aware of who that is. Just a side note, For borrowers from late 90s, early 2000, you may have more than one federal servicer. Many years ago, if you stepped out of college, stopped taking loans, and then re-entered and borrowed again, or you switched schools, your federal loan servicer may have changed. So you could have multiple servicers. So look carefully on studentaid.gov to make sure you're capturing all of the servicers that are holding loans under your name. Okay. So about the loan transfer process. So if you originally had Fed Loan Servicing, Navient, or Granite State, that servicer will send you a notification that your student loan portfolio is being transferred to another servicer. That servicer will then send you a welcome packet. However, if they don't have your current information, you're probably not going to get this. So again, it's super important to sign on to studentaid.gov, identify your servicer so that you can contact them and provide your most current personal information. All of your loan information will be transferred from the original servicer to the newly assigned servicer. There are no changes in the terms of your loan. The interest rate will stay the same. The monthly payment should remain the same. One of the drawbacks is being transferred to a new servicer is you may be limited in what you can view on that new servicer's website. The new servicer may not have your 5, 6, 7 years of loan history. So that could be a limited view. But the two servicers are going to work together to make sure that there is no delay, your payments are credited appropriately, and things like that. So also an important note, if your account has been transferred, you want to make sure that your payments are credited, that if you were previously set up with auto debit, that continues. So you may have to update your bank or routing information on that. And a note or a plug for auto debit, if you sign up to have your monthly payments auto debited from a checking or savings account, you may be eligible for an interest rate reduction. So that's always a plus. And then be sure to follow the new servicer's instructions. They want you to create an account on their website. Learn how their process works, become familiar with it. So a lot of good information on the servicer's website. All right. Now, we don't want you to get scammed. I don't know about you, but I'm receiving phone calls every week, somebody promising me either loan forgiveness or they can lower my monthly costs. First off, never pay for this. Your federal loan servicer assigned by the Department of Education is at no cost to you. You never, ever, ever have to pay for assistance with your federal student loans. Immediate loan forgiveness, as you saw from a previous slide, teacher loan forgiveness is the only one that offers something under 10 years. It may be 5 years of on-time repayments. A portion would be forgiven, but most of them are going to be 10 years plus before any portion of your federal student loan can be forgiven. Remember, these are federal loans. Federal government sets the rules and regulations for this. No third party can speak on their behalf. And never, ever, ever share your FSA ID. That's your username and password. We wouldn't think of sharing our credit card number or PIN number. That's our information. We don't want it used inappropriately. Same thing with your FSA ID. Never share that. Here's a current list of the federal loan repayment options. 4 of them are income-based, which I like to share with students. There is a repayment plan for every student's budget. Talk with your federal loan servicer. They can counsel you. The good part is you can change these loan repayment options up to once a year. If you take no action, the servicer will automatically enroll you in the standard repayment plan, which is they take what you owe, a minimum of $50 a month, and they will stretch it out up to 10 years. So you will make 120 equal monthly payments until your loans are paid off. Now you can see graduated and extended. Boy, you can extend these student loan payments up to a mortgage, up to 30 years. But anytime you extend the repayment, yes, it reduces your monthly loan repayment amount, but you are paying off a whole lot more interest over the life of that loan. Okay. Public service loan forgiveness. This is the one that's been in the news quite a bit. And this is the one that literally after 120 qualifying monthly payments under a qualifying repayment plan while working for a full-time qualifier employer, a lot of qualifiers here. The plan was to assist borrowers who were engaged in U.S. federal, state, local, tribal, and not-for-profit organizations to pay down their student loans. And so this program was launched in 2007, that after 10 years of making qualifying repayment, on the 11th year, the remainder of the loan would be forgiven with no tax liability. But moving your loans into that qualifying repayment plan escaped a number of borrowers. So the Department of Ed has launched a one-year period, and they're calling it the Public Service Loan Forgiveness Waiver Period. Launched last October, it will wrap up this October. And it's for people that didn't quite have it in the right repayment plan, may still get credit for their repayment during those few years. So if this is something you're even remotely interested, act now, because the deadline is coming up. If you're in a FFELP program instead of the current direct loan program, you will have to move your loans, but that's all part of the application process. And this is something that annually you have to reapply and certify your loans, stating I was with a qualifying employer, and as well as they worked full-time, and just to verify that information, but act now on that. The current servicer handling this program is Fed Loan Servicing. As I previously mentioned, they are leaving the federal student loan program at the end of this year, so they are in the process of transferring their borrowers over to MOHELA. So between that, the Public Service Loan Forgiveness Waiver deadline in October, and we're looking at the national forbearance ending, that's a lot of things happening this fall. Can't stress enough, if interested, please take action now. Okay. Consolidate versus refinance. Just because you have multiple federal loan servicers does not mean you're required to consolidate. If you have just one federal loan servicer, you'll be making one monthly payment. It's for those few of you that have multiple servicers, you may want to consolidate those loans so you are only making one payment per month on your student loans. And consolidation applies just to the federal loans. It does not lower your interest rate though. So it's just streamlining your monthly bill paying, not to be confused with student loan refinancing. That's a case where you're taking the loans away from the federal student loan program and financing them with a private lender. Not all private lenders do that. The interest rate will be based on the current markets. So again, look at studentaid.gov. You can drill down to see your specific loan, the period of time that you received that loan, through what institution, the college, university, as well as what the interest rate was. So for some of us that have older loans, we may have lower interest rates than what they are offering now. So why give up a lower interest rate just to streamline a payment? Think through that before taking action, because you cannot pull them back. Okay. And then here's the downside. If we fail to repay our student loans, or if we become too far delinquent on a student loan is meaning 1 day late. Defaulting means you've not taken action for over 270 days when you were required to make a payment. Okay, because this is a federal loan, the U.S. government can garnish your paycheck. That does not give you credit towards repayment, because that is not voluntary repayment. They can revoke professional licenses, which then it just gets to be a vicious cycle of how do I work and earn a living if I don't have my license. Loss of state tax refund as well as federal, because we're a state university. The state of Missouri can pull from our tax refund. A loss of those 8 repayment options. When you've defaulted on the student loan, your servicer then turns your account over to a bona fide collection agency. They're not going to offer you repayment options. They will tell you what the monthly payment is. And then unfortunately, these loans cannot be declared in bankruptcy or included in bankruptcy. So they will follow you to Social Security, which can then be reduced. So by all means, work your hardest to repay these student loans. Remember, you have several options, even income-based, that will find a repayment plan to fit your budget. And then finally, if you have questions, I can't stress enough, visit studentaid.gov. It's a wealth of information. You do not have to have a username and password to view all of the options. For example, manage loans. You can look at the loan repayment options. You can use a loan repayment calculator to see or estimate under the various plans, what would my monthly loan repayment be? And again, if you can't afford the standard repayment plan, reach out to your servicer, move it to one of the income-based repayment plans. Your federal loan servicer, once you identify who that is a wealth of information. And then, of course, you could reach back out to us here at Missouri State University. Sometimes I have students say, I don't really understand what they're asking me. Can you translate? We're happy to help. We are here for you.
So to summarize, there are a lot of options when it comes to going back into repayment on your student loans. One of the worst mistakes a borrower can make, however, is kind of that knee-jerk reaction of not opening that envelope because it's an uncomfortable situation or it's just kind of something you're not used to. But the longer you put off setting up your repayment plans, the more behind you'll become. And so early action is key to making sure that you're making the best financial decisions for yourself. Though we can't act on your behalf, when it comes to repayment, as your financial aid office, we are happy to serve as a resource to provide you with information, to get you in contact with those who can assist you. We are limited on what we can do, but we do want to serve as a resource to our alumni when it comes to this repayment process. Our country and the system has never experienced such a massive restarting of loan repayments. So we want to make sure that Missouri State alum encounter as few hitches throughout the process as possible, which again is the purpose behind this video and us wanting to provide these resources to you. So act early, ask questions if you have them. We're all in this together and we're hoping to hear from you.
Rob, Vicki, thank you both for your time and for this information that you shared with us. And just as you closed, Rob, thank you again for providing this resource of information and to open yourself up to questions from our alumni community and bears out there who span the country and even the globe. So please don't hesitate to reach out to either Rob or Vicki or myself, and we'll be glad to get you in touch with them if you aren't able to navigate the system. Rob, Vicki, can you tell us maybe some questions that you're typically getting from folks? And I know comprehensive presentation you just did here right now, but what would be something that someone's calling you on the phone to say, hey, do I have to pay my loan back? Is that the typical question? What would be some of the things that people are curious about right now?
Yeah, so hopefully this isn't outdated by the time you watch this video, but one of the biggest questions is what's going on with loan forgiveness? I think that's kind of the media's favorite thing to report on right now. As at this point, President Biden has indicated that he does have a level of interest in some amount of student loan forgiveness. On the congressional side, the Democratic representatives have mostly unanimously provided support to this stance that there should be some level of loan forgiveness. Some members of the Republican Party have called into question whether or not the executive branch has the authority to forgive student loans. So there's a lot of question regarding who can do what. However, President Biden has indicated that he does plan to forgive some level of loans and that later this summer, more information will be forthcoming. So it's important for borrowers to keep an eye on the news so that they know what's happening. Again, we will try to post updates to our social media on Twitter and our blog page as much as we're able to as there are developments. But it's important to stay mindful of what's happening, even though it can be confusing at times. Because as Vicki mentioned, things like the public service loan forgiveness waiver, you don't want to miss out on that October deadline. If there is a forgiven amount, you want to make sure that that's reflected on what your servicer is showing you on their website. But that's the biggest question related to the repayment pause is how much will I need to pay back? And unfortunately, the answer is kind of a question mark at this point. I would say to be on the safe side, assume you must repay back everything that's on your account at this point. And then anything different from that is just good news, Christmas in July. Vicki, are you hearing any other questions from graduated students who have loans outstanding?
Students question, I received a call from company ABC. Is this my federal loan servicer? And I direct them, of course, back to studentaid.gov. I can also log on through a department website and confirm this is what I'm seeing as your federal loan servicer. Is this the same company? And then I say, get on their website, especially for students who are still within that 6-month grace period. So they, even if we were not under a forbearance, would not be required to begin making payments. I will say, don't wait until month 7 to start figuring this out. Because as Rob alluded to, we have, I think the estimate is 42 million borrowers that once the forbearance ends, will all go into repayment at the same month. That's never happened before. So it'll be trying to like shop at Christmas on December 24th. You and everybody else is going to be quite the bottleneck. Get your ducks in a row now so that you don't have that panic. So when we do start this back up, you will be prepared. It takes that stress off.
Thank you, Vicki. Rob, is there a website and a Twitter handle you would like to promote so folks do come out and if they have questions to get in touch with you?
Absolutely, yeah. Our main office website is missouristate.edu/financial aid. And from there, you can find our blog. So we'll have updated posts as there's more information. You can also find the contact information for our social media. So if you're on Twitter or Instagram, you can get the information through those channels as well. I'm not huge on social media myself, but we try to keep those things posted as much as we can. And then of course, email. If you have a question, shoot us an email and we'll get you whatever answers we have available at the time. And, our goal is just to help Maroon Nation get back into repayment successfully with as few hiccups as possible.
Thank you, Rob. And Vicki, is there anything else that you'd like to share? Giving the last word to you all before we close.
I guess I would stress with the 8 loan repayment options, there truly is a repayment plan for everyone's budget.
Mhm.
Don't go into a default status. Don't stick your head in the sand. There is an option for you to be within good standing on your student loans.
Great. Thank you, Vicki. Rob, appreciate you both for your time and for your care to connect with and share this message with alumni around the world. On behalf of the Missouri State Alumni Association and to all of you out there who may be tuning in and watching this, we're thinking of you and just want to say, go Bears. Take care, y'all.
All right. Thanks, Greg. Appreciate it.
Thank you.
Thank you all again.